All right, we're going to do our usual. We're going to do our usual, going through the lists, indexes. First of all, do I think top is in the market? Absolutely. Do I think we will crash? No, but the pullback has been severe. And what is my advice for traders? This is the trading part of the show. Sell every single rally. Rallies are not going to hold until a bottom is built. That's why you don't catch a falling knife. These are the triple Qs. Like today, the market was up over, the Dow Jones is up 650, S&P is up 62 handles. The comp was up about 250. Now it's only up 170, right? So every rally is being sold. I can see it. There are walls of stocks. However, you guys can see I'm like rolling here on my stock finder. MHK is making a new all-time high, which I will take a look for you guys on that while the market's going down. So this is the triple Qs, S&P, daily chart of the NASDAQ 100, right, which includes the Mega 7. So what are we doing? Like if you go watch the old power hours, I keep saying the trend is up. I had my trend lined up, short term, medium term, and long-term trend. Trends are still up. However, first shot across the bow is short-term trend was broken. If you had your trend line drawn, you should be shorting the market right here. When the trend line broke, snap back up. It broke under the 20 EMA, 50 EMA. Now it's kind of cruising towards the intermediate term, which I highlighted, uptrend. If that breaks, which is coinciding with the old high at 450 on triple Q, watch out. Then we're definitely going to test the 200-day, which is at 430, and we may test a long-term uptrend, which goes back a long time, people. So long-term uptrends, got to be careful. That long-term uptrend goes actually, well, there's more uptrends. Like this is the super long-term uptrend going back to 2020, right? And then there's a mega long-term uptrend way down here. And we're talking 200s now on the triple Qs. Will it get there? No. I think if we do break this intermediate term uptrend, we're definitely going to test 420s right about here. I have my lines drawn already. Right about, I would say 414 to 420 range on the triple Qs. So from 500 to 414 or 420, let's say that 80 handles. That's solid 15%, right? So we could experience something like this, but then you guys need to take it as the market gives you. So market's definitely in a downtrend, short-term downtrend. The short-term uptrend is broken. It's under its 50-day right here, 50-day EMA. It's under its 20-day EMA. You don't want to mess with it. Now what you want to do is every bounce up, it's called dead cat bounce. Nothing against cats. I love cats, but that's what it's called. Every bounce should be sold. If this bounces back up to the 50 EMA, 20 EMA, 475, 480, definitely should be shorted or sold until it can prove itself otherwise. So the trend has changed. So be careful. Yeah. So the old high was at 450. I think that's definitely coming. We're at 464 range. We have a little bit more pain to go, but ultimately, I definitely think we're going to test the 200-day average like we did back here in October, November of last year. And if that doesn't hold, then we're definitely in a bear market. So that's the triple Qs. Let's go to the TLT, which is the 20-year note index inverse relationship, right? The rates actually kind of coming down. So if this chart is going up, that means the rates are coming down. It's in an inverse relationship. One thing I'm really closely watching is the super long-term downtrend, meaning uptrend in interest rates. There is this channel that I've been watching. This channel goes back to literally 2011. No joke. So there's that downtrend, right? The channel. We're right against it. That means rates are going to, when the Fed starts cutting rates, this chart will start going this way. Follow my cursor going up. And this is the super long-term uptrend. That dates back to 5 years. This is when we had the zero interest rate policy. Okay, see what's been happening to interest rates. That means the chart's going down means rates are going up. So yeah, we're at the cusp of lower interest rates. I believe it. That's why rotation is key. You got to pay attention to these things. And I'm going to go, after that, I'm going to go to the spiders, SPY. Spiders are not as bad as the triple Qs because they're more diversified as an index. However, this is like going back 2 years. So I have my lines drawn. I don't have too many lines, but I usually, I have, it's in a short-term downtrend, no doubt about it. It's under its 20 EMA, just breaking the 50-day EMA. Okay, right there. Right here. There you go, right there. And intermediate term uptrend. It's right on it. It hit it yesterday. It bouncing back today. I don't believe it. I think it's going to roll over. We had this kind of pullback here before. It held the uptrend twice. It may hold the uptrend. I don't know. That's why I keep telling you guys, you have to be patient right now. You cannot just anticipate a buy and then market gaps down, breaks that uptrend. The next support is going to be at the 200-day EMA, which is right about 502, 503. We were at 565, people, right? So that's about a 12% clip haircut. But then, we held the uptrend for now. The next uptrend that we need to pay attention to is this one right here. I can draw this uptrend here too, but let's take it back a little further, see where that uptrend is going. That uptrend is the one to watch, to be perfectly honest, which is at 440. So did we have pullbacks like that before? Of course we had, right? And this is the pandemic, by the way. And we had more severe one when the Fed started raising rates. I'm circling my cursor here. So market is definitely in a drawdown mood. It could be one of these, but I don't think it will be. I think it's going to be deeper. I think this uptrend is going to be broken. And simultaneously, the 50-day EMA is going to broken. Any close under 50-day EMA is going to accelerate the pain a little bit more, but that's why you don't catch a falling knife. Let's look at some charts. AMD. Okay, let's look at AMD. All right. Okay, so I had an AMD trade. It was going sideways. It broke out. We should have made some money. Since then, what has AMD done? Okay, this is the proverbial falling, catching a falling knife right here. Stock was 188. Today it's at 139. It sold off 50 points on a breath, literally in the last 7 days. What do I look at AMD now? People are going to go, well, it's cheap now. No, it's not cheap. It could go down to $100, right? And what did it do? Every single time it got to the 200-day average, which I have highlighted, it held and it did well. This time it went through like, hot knife through butter. You guys got to be careful with these stocks. Now, what do I expect AMD to do? I expect AMD to bounce to 150, hopefully, so I can short it. Earnings are coming out on AMD. I'll be careful with it, but I will definitely be looking to short this under 50-day, under the 200, under the 20 EMA, 50 EMA. Nothing positive on AMD. Used to be my favorite. Now I don't like it. Now here comes my positive. Okay, this is what we're talking about. You guys notice the difference between this chart and S&P 500 and the triple Qs, right? What our triple Qs are doing? Going down 8, 9, 10%. S&P 500 down 5%. This is the trade I talked to you guys about 2 weeks ago, okay? This is the Russell 2000. And if John is still here, he will remember our conversation after we had dinner because he's in LA. I had drawn these lines for you guys, the resistance lines, right? What happened? The rally has broadened out. Russell 2000 is completely outperforming, right? The S&P 500 now, after underperforming for the last 3 years. But I said time has come that small caps outperform. Why do small caps outperform? It coincides with the lower interest rate policy that the Fed is going to start following now. Because, believe it or not, interest rates don't affect large companies as much as they affect small companies. So there we are. So this is 5-year IWM, okay? 5-year, 10-year Russell 2000. This is the crash, right? Pandemic. This is what has happened after that. The Russell 2000 is nowhere near its all-time high, while the S&P or the triple Qs have made ridiculous all-time highs. So I'm going to put the same time period for the S&P 500. Look at the difference. Do you guys see what I'm talking about here? Do you guys see what's going to happen here? What's going to happen here now, if you're going to DCA, definitely DCA into IWM. Two things are going to happen. If the S&P 500 is going to go down another 20%, IWM is not going to go down as much, or maybe even go up. If the S&P 500 is going to go up, IWM is going to go more, okay? Because low interest rate policy, this is IWM, 10 years. This is the same duration. This is SPY, and this is triple Q. Look at it, right? These are the same time zones. This is the pandemic. Look what the triple Qs have done. Massive drawdown, obviously, and then all-time new highs, right? What does IWM have done since the pandemic lows? Not much, right? And that's why I put out that trade. I think small stocks or Russell 2000 is definitely going to outperform. So that was the beautiful trade that I gave you guys. And let's look at a few mega sevens. Now, you're going to say, what's doing well, Serge? Well, hey, how about Goldman Sachs? See how different it is, the charts, that when you guys are watching charts? This stock is making almost all-time new highs. All the S&P 500 is selling off, right? You have to find these stocks, though. You have to understand what's happening. Stock is on an uptrend. If you look at the S&P 500 chart or the triple Qs, okay, which is this one right here, it looks quite different, doesn't it? Triple Qs are going down. Goldman Sachs is about to make new highs, right? Conversely, let's look at Tesla. What did Tesla do? Tesla broke out. I gave you guys that trade right here. I said August 185s. We're buying at 5.5. They ended up going to 28. If you sold it, I hope you sold it. Obviously, there was a little pump on Tesla that came with the robotaxi. I love Elon Musk. Don't get me wrong, but half the shit he says is fake. And I don't have huge hopes about robotaxi anyway. And then earnings came out, huge gap down. Stock is still in a reasonably okay uptrend. Don't hate me if you're a Tesla lover. I love Tesla, don't get me wrong. The only good thing that has happened is that there was this massive, you guys see this pattern right here? This goes back to when Tesla was $20. You guys need to follow these things. This is called like a massive triangle or a wedge. It broke out. Now it's pulling back. Would I buy Tesla at this price? No. With what I think is going to happen to the market, maybe on a pullback to 200. I don't know. Back to its 200 days. Still above its, looks still okay, but nothing major. It's coming to test its 50-day EMA. I may give it a shot, but not my favorite. And let's look at some, a couple of mega sevens. This is Apple, right? Still hugging the uptrend, just about to break, right? But then I talked to you guys about something called negative divergences, right? So Apple made a high right here. RSI on that got up to about 76, 77. Next time it made an all-time high, RSI did not make that, and then it collapsed, obviously now. Apple, yeah, okay, no big deal. Earnings are coming out on all the Mega 7, by the way. Tesla is out of the way. Google is out of the way. But now you got Meta, Microsoft, Apple coming up this week, coming up. Would I buy Apple? Yeah, if it pulled back to 200 range, maybe for a trade, really nothing really special. And Microsoft, it's kind of duplicate of the triple Qs, right? They're still above their 200-day EMA, but definitely under their 50-day EMA. I'd be really careful catching knives on these. Just let it settle down. And everybody's favorite, NVIDIA. Well, if it isn't funny that NVIDIA is kind of creating this pattern right here. I'm circling it now. The intermediate term uptrend is still intact. Short term uptrend definitely broken. That's why once my trend lines break, by the way, I take them out. Here's the resistance line, all-time high, but it did exactly what I talked to you guys about negative bearish divergences. Stock made an all-time high at 140-ish before the split, or 1400. And that's where the RSI was, right? And then next time it retested the high, almost came close to that 135. The RSI was never, see, I'm circling it, was never near it. And that shows weakness to me. Stock is under its 50-day EMA. Don't like it. Let it settle down. Although yesterday, if you wanted to trade jockey it, you pull back into support. You have to have these lines drawn. It came literally down to it about 107.5, and then it bounced 10 points. There's your 10 points if you want to trade it. Intermediate term uptrend is still intact. Way above it's still 200-day average. Earnings are coming out. Bunch of gaps to be filled. Will it get down to, yeah, 97 to 100 is a really, really decent buy on NVIDIA. That would be 40 from the top. Is the AI game over? No, but is the bubble over? Yeah, definitely. Bubble is over. People are waking up to it. Let's pull back NVIDIA again. Look at NVIDIA. I mean, what is happening is that, by the way, stocks don't get volatile and, too volatile on tops and bottoms. It's happening now. And lastly, what I want to talk to you guys about, which I put out a video, you should go check it out, but quickly I'm going to talk to you guys about the volatility index. This is called the volatility index. This is an inverse relationship index, right? When volatility goes up, stocks are going down. And do you guys see what's happening? Volatility index was down to 12. It got up to almost 20, right? And then compare now that to the triple Q chart, right? See what's happening? It's inverse relationship. And you guys should put that on your watch list. VIX is the symbol. Definitely watch volatility index going back where the volatility index could go. It could go a lot. I mean, these are crashes, by the way. When the volatility index gets into the 30s and 40s, that's when crashes are happening. And obviously, this is during the pandemic. Volatility index got up to 85. We're only like 17. So people, be patient. That's the P. But on average, if volatility index gets up to about 30-ish or so, 35, that's usually pretty close to the bottom of the market in pricing. So you guys have to understand, when volatility index is 12, we're pretty close to a top, short-term top. When volatility index pumps up to 35, it's pretty close to a bottom. So you can watch this, kind of gauge where things are at. And then next, I'm going to go to a few charts that I'm still watching. One of my favorites, MicroStrategy. This is the Bitcoin surrogate, right? My lines are drawn. Resistance lines, support lines. Here's a support line. This is literally copying Bitcoin, right? But this is like Bitcoin on steroids. And if you have the stomach for it, do it. It's a 1,750 stock, but it's issued a 10-for-1 stock split. So it's going to be coming up next week. It'll be about $175 stock. I think Michael Saylor is a genius. He's mortgaging the company and buying tens of thousands of Bitcoin. I think he's up to 226,000 Bitcoin. That's what the company is made about. Now, you guys are going to say, well, he's crazy. I'm like, no. This is the little stock that I gave you guys, by the way. Remember, Serve Robotics, $2, $2 accumulation. What happened? NVIDIA announced a 10% ownership, and Uber announced 6% ownership. Boom, stock goes up. I had 12,000 shares like an idiot. I sold mostly about in the 8s. Stock is, I'll take a quadruple. Stock is 14. It hit 16 and change today. So even on $2 stocks, things are possible. Okay. Do I think the company is worth 16? At 16, the company is $650 million. No. Will I short it? You can't short it. There aren't too many stock, shares to borrow. Let's look at some setups that I think will be reasonable to look at. We had talked about this, like follow Bitcoin. If Bitcoin breaks out, what's going to do well? Two stocks that I follow, Bitcoin miners, Marathon, right? We even talked about this. Go check the power hour. It was in support. I said I would be a trader of this. Go check it out. It's all on the channel. It went from about 19 to 27, pulled back to 20. Still kind of going sideways, but I would be a buyer of Mara right about here, 21.5 range, with a stop at 19. So low risk, good return possibility. The best one out of the whole group is actually called Clean Spark. That's been going sideways like Bitcoin for the last 4 months, okay, since early March. If Bitcoin goes from 68,000 to 110,000, this thing is going to double, triple, okay? Because I can pull it back and show you guys what it has done. And they're the most effective, most efficient miner of Bitcoin with a highest hash rate possible. Still in a channel, upper channel, lower channel, support line, resistance line, whichever way it breaks, it's gone. Figure it out, people. Here's one of the ones that I like, Alibaba again. Man, I think the stock is so cheap on a fundamental basis. Technically, it looks like shit, but on a fundamental basis, it's really, really, I think, is super attractive. You know, we keep talking about Carvana. See, market's going down, Carvana is going up, right? You guys got to find outperformers like this. One of the ones that I think we need to pay attention to is super microcomputer. That goes with NVIDIA. Now, stock is breaking down, but it's testing the 200-day. Is it going to hold? I'm not sure. But then if you really, really love the company and love AI, will there be a hold here and a rally of 20, 30 points? Maybe, but there are better charts out there. They have to prove themselves. Coinbase still going sideways, just like Bitcoin, just like MicroStrategy. So if you're, I'm giving you all the surrogates for those. First Solar was one of the ones that I'm really closely watching. When the market, I mean, this obviously had a massive move when Biden announced the restrictions on China on solar panels. You know, watching that. Here's a chart that I kind of watching. Okay, it's called Upstart Holdings. They're like they're not an online bank, but they do loans online with the new AI models and stuff like that. Let's pull it back and see what Upstart can do or has done. In this pattern right here, stock was down to about 15. It went from 15 to 75 in a matter of a month and a half. Last time earnings was a catalyst, gapped up. So this time right here, I am buying the stock here about 26 range. My stop is right at 23. So risking 10% to let it run. Stock does have a crazy run. Stock is extremely heavily shorted. So if I take it back right before it popped, stock was a $400 number, by the way. So definitely accumulating it here with 10% downside, potential 4-bagger.